Now let's analyze the dollar yen chart and put whatever we've learned so far to use. So we look at the 2-year dollar yen chart just to get a brief history of where the currency was and what kind of patterns we can find in dollar yen. We see that the dollar yen was at a high of 123 roughly in December 2015. From there we see a downtrend, a bearish move on the dollar yen. So we can draw this trend line down. We need better tools than simply drawing with a digital pen. We need to find a website or a software where we can improve on these lines and find exact entry and exit points. Most of 2015 dollar yen was a downtrend confined within the channel. Now the big figure 100, as we see, offered support, and dollar yen did not break this support. We also see something interesting is that this is the base of the triangle from June to roughly October, November, and this is a descending triangle. We see that the triangle did not break the baseline, 3/4 or 50% of the distance from the base of the triangle. And therefore, if the triangle broke the base, it would have continued down a minimum of 100 to 110. So 10 yen minimum distance down, but it did not break. So 100 held pretty well. And November 2016, I think that was when the US election happened, and roughly December 2016 was the FOMC. So the dollar gained during this period, and a failure to break the triangle caused the dollar yen to reverse its trend and move back up. So if we draw the 45 degrees trend line, we see that the dollar yen moves along this trend line. The move from December post the FOMC, the move from December to January, February was too steep. This was not sustainable, and the dollar yen again consolidated downwards. However, we see something quite interesting in 2017 to date. We see that the dollar yen moves from 100 to roughly 118 quite rapidly, and has retraced 50% of this move. 18 yen, 50% of 18 yen would be 9 yen, and this is roughly 103. We need more precise numbers. So 103 to 118 is 15 yen. 15 yen, and 50% of 15 yen is 7.5 yen, and 66% of 15 yen is roughly 10 yen. So the move from 103 to 118, 50% of that would be 118 minus 7.5, which would be 110.5, which is roughly here. So this is 110.5. 66% would be 108, which is, I think, stops here. So we see that the dollar yen sustained the 66% support. It has held the 50% support. We could also take retracements from 123 to 100. So 123 to 100 is 23 yen. 50% of that is 11.5 yen. So that's 50% retracement would be 111.5 yen. 66% retracement is 15.2. So 115.2 should be a strong resistance now, roughly here. So the downtrend is over. You've got a triangle. Dollar yen again moves into a uptrend. You've got a period of consolidation here. Now we need to know what we plan to do at this stage. We are here in July 02, 03, and we need to take some positions based on our analysis. So since we need to take some positions, we need entry and exit points, we need to zoom in dollar yen. So let's move on to the 1-year chart. We see some very interesting pattern on the 1-year chart. You can take a guess. So you've got an uptrend, you've got a consolidation pattern. You need to figure out what this consolidation pattern is. To me, this looks like a continuation head and shoulders pattern. Again, we need some better tools. So you've got this as the left shoulder, you've got this as the head, and you've got this as the right shoulder. So you've got the left shoulder, you've got the head here, and you've got the right shoulder, and you've got the breakout here at roughly 112. The distance between the head and the neckline here would be roughly 5 to 6 yen. 115 to just below 110, which let's assume this is 108. So you've got 7 yen. So you can project 7 yen from the breakouts. Let's assume the breakouts at 112. So you can project up to 119 for the yen. Now assuming that the dollar yen breaks at the neckline, on a closing basis, we can initiate some positions here. Let's go ahead and initiate these positions on the simulator. So let's recap. Again, we need to do the same thing on all the currencies we are looking to trade. Currencies, commodities, stocks. So we've identified the long-term trends, we've identified the current trend, the past trend, the retracement levels. We've looked at various patterns in the dollar yen. We can also zoom in further and look at reversal days. We can look at spikes, triangles, flags. So what we did for initiating a trade, for finding a good enough reason to initiate a trade, is that we've said that the trend is up for the dollar yen. The primary trend is up. Now there has been a period of consolidation here. We've identified this period of consolidation as a head and shoulders continuation pattern. We've got the left shoulder, the head, and the right shoulder. We've identified a breakout point at roughly 112. So we need to go ahead and initiate our positions either aggressively at 112 or wait for a breakout, a closing above the neckline to initiate the position. Let's go ahead and take a position on the simulator at 112. So you would look at other currencies in a very similar fashion, or however you think you would like to go ahead and analyze the currency and justify your trades. you.